Life is great. Life is grand. Life is good. Hey, you know what? Why don't we just play the song? Everybody ready for the happy song? Hang on, I misspelled it. Introduction. Life is beautiful. Hey, 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 hey. Hey, hey. G'day, mate. Shall I throw a pip on the body for you? Ripper. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. I'm also the Chief FX Markets Strategist for TradersWay.com. I'm trying to teach you how to become a successful Forex trader because I'm greedy. I'm greedy because I want you to open up a live account at TradersWay.com with real money. I'm greedy. So to get you to do this, I'm going to help you become a successful Forex trader first. Help you build some real skills that develop consistent results that give you confidence to trade real money when you are ready. And then we will be your prime broker. So the greediness starts with your success. Hey, well, at least I'm being honest, right? We do these sessions 7:30 in the morning, Monday through Thursday here at Forex.Today, and every Friday at fxstreet.com, where I am Forex Speaker of the Year. These sessions are live at Forex.Today. You're welcome to ask as many questions as you want. You are the boss. I am simply a humble currency trader. If you're watching this as a video on Forex.Today or perhaps on YouTube, make sure you like and share and all that kind of stuff. Do what's right. Do what your mother would want you to do, and that is to leave a comment, leave a like, share it. You know what I'm talking about? You want to make your mother mad at you. So I shared a link here earlier. I think I did. No, maybe I didn't. Beep. Here it is. The ECB meeting minutes were released just seconds ago. So you can go to the ECB website and download that. Underlying price pressures are an ongoing concern. Yup. That means deflation. One of the biggest things right now creating deflation is falling oil prices. The council agreed that immediate focus on implementation. Yeah. Prepared to use all instruments available under the mandate, if necessary. Market impact of Brexit vote contained. Remember, this is their meeting minutes from July. And surveys and forecasts are showing little signs of inflation expectations. Wow, lots of reading for you, huh? Yeah, we knew this when we went through the calendar on Monday. Lots of downloads for you to download and lots of reading for you to read. Cool. You should fall in love with that type of work. Life is great. Life is grand. Life is good. Life is beautiful. So FOMC meeting minutes shows no rush to hike rates. So the dollar gets weak. That's that. French unemployment came in better than expected. Yeah, good job, France. UK may avoid this recession on its way. You notice the news for July out of the UK seems to be better than expected, but I see a lot of this has to do with inflation. You know, like the pound has dropped very, very, very significantly recently, right? So retail sales go up. Why? Well, I'm thinking more domestically, so not exports, more of an import issue. No, 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 no. No, no, no. They're not cheaper to people in the UK. Imports are not cheaper. Your currency is devalued. Everything is more expensive. Okay, guys? Your currency buys less than it used to. Prices go up. The purchasing power of your currency is diminished. So things like retail sales could go up, but it's only because you need more pounds to buy the same thing that you used to buy. Remember, not long ago, the British pound was at 230. Now it's at 130. Okay. So, anyways, prices are, and of course, it just dropped from 150 to 130 like in a day. So that's very significant in in the velocity of that change. So, anyways, things like inflation going up, prices going up, and it's not necessarily because the economy is expanding, right? Because there's this idea like prices go up when everyone's buying because everybody's filthy, stinking rich, or prices are going up because your currency buys less, right? A can of Coke in Venezuela probably cost you $1,000 US. Well, 1,000 local dollars, whatever they have, pesos of some sort. It's not that everyone's filthy, stinking rich. It's that their currency is worthless, right? Okay. So, anyways, there's that. So, better than expected UK retail sales. But as I was mentioning earlier in the week, these retail sales are calculated in terms of currency spent, not units sold. So they might have sold less units month over month, but because the currency is weak, things cost more, and there you go. So it may be. Well, how about this? If you are earning the same, but the money you earn buys less, you're not likely to spend more in the future, right? It's like you earn less income, isn't it? You understand that? Like if I put it in that term, it's like you're earning less money. Yeah, so now you're not going out buying things in the future. So it influences income. So retail sales are kind of going up on the short term, but really what's happening is your currency is being devalued. So to a local UK person, it feels like they're earning less money, and in a way they are, even though they're earning the same amount of pounds. Those pounds buy less than they used to, so it's like earning less. So then you spend less now because people are not being, it's not crushing people yet. It seems like it's going up, but it's just prices going up for the wrong reasons. But per unit sales are probably going down, which means inventory is falling more slowly than it normally would, right? and therefore less orders for factories and less and factory utilization, right? Capacity utilization type numbers are not going up; they're probably going down, and eventually they'll have to lay people off. You see, and it's not a right. So yeah, so it's not necessarily a good thing. Is all I'm saying. What else? Anything else going on overnight? I'm looking at boons and stuff, so I don't know. All right, so we got jobless claims later today. Great. Philly Fed, fine. Philly Fed can be interesting. Leading indicators coming out at 10. That's also interesting. It's kind of like an index of reports put together. Very cool. It's going to be a good day. Nice, boring day. Did you guys get the Chilean GDP number? Came out just a few minutes ago. It's a negative number. Is that good? It's negative quarter over quarter, which is strange, and it's less negative than I thought, which I suppose is good. But and year over year, it's 1.5. So strange. When you're strange. All right. So what do you want to do? Oh, this is what our trade plan was yesterday, right? You guys remember this? Yesterday in New York, the trade plan was to sell it off that top. You guys remember this? We were right here yesterday, and I connected this top with this top. That's where we were. You can see the open of yesterday's New York session. Isn't that cool? And I believe the short-term target was this 128 green zone. Leon, did you catch it? Or did you guys avoid it? Now, remember, Wednesdays are days you should be trading the Canadian dollar, which is yesterday. That's one reason why we're looking at this. And then something odd is happening in here, huh? So we got to be careful. Now, one key part of this trade plan yesterday was this. Let me zoom in. Life is great, life is grand, life is good. You guys remember this right in here? Yesterday, the 21 EMA was right there. Isn't that cool? So it was down, 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 up, up, back to the 21, drop it like it's hot. Yeah, you trade Canadian dollar every Wednesday because at 10:30 New York time, oil inventories are released. And that affects the price of oil, which affects the price of the Canadian dollar. Also, I believe Friday you should be trading the Canadian dollar, which is tomorrow, because there's a lot of CAD news. Right? So what do you think, Cash? Does that make sense? Oil inventories are released at 10:30 a.m. New York time every Wednesday. Yeah. So people are going to be interested in CAD. Even before the news, they may want to front run that news or get out of a trade because of the news. But volatility is likely to increase on Wednesdays. Yeah. So now what? Well, if you're a bull, you need to plan a double bottom. Does it mean you're going to get a double bottom? No, sir, it do not. Okay. But it's your job to plan it. Okay. Okay. First part of the reversal pattern is you have to be at obvious support. Is this obvious support? By the way, I'm not saying you should be a bull. Just want to be clear. We're going through a bullish trade plan if you are a bull. Okay. Why is this support? Hope you don't mind that I'm making you do the work. Daily support 1, okay. Thank you. What else? Weekly profit zone. Yes. Otherwise, weekly M1. What else? Psychological number of 128. Great. Former resistance. OMG. Well, you're probably going out farther back than that. I don't know. I don't see what you see here. Okay. Oh, is there a monthly in there too? Sweet. All right, I'll accept that. So there's a daily, weekly, and monthly pivot cluster. Okay. And then the double bottom. Thank you, Miriam. All right, so there's enough to go on if you happen to want to be a bull, or if you just wanted to trade. You should probably be ready to go in here, right? And that's an hourly chart. And nobody mentioned this. Life is great. Okay, this is important when you're at a double bottom at support. Okay. This, not important. This, not important. This, not important. This, very, 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 very important. In particular, at a double bottom at support. Okay? What's the difference? Well, when price is down here, okay, when it's doing this, it's telling me we're not making any lower lows. So does that suggest the double bottom is holding? Right? It's just an algorithm. It's not guessing. It's actually mapping something. And then having it up here, what it's saying is not only is it not making lower lows relative to the previous candles, but it's starting to make higher highs relative to the previous candles. And that's particularly important in a double bottom. So if you're hot to go HOTTOGO, okay, now you'd set it up on a smaller time frame. Okay? And you would do something like this used to be support, right? This then became resistance, right? So maybe you treat this like a 1, 2, 3. Maybe? Maybe? It's still pretty early in the game. But if you're a bull, under these circumstances, I think you'd be looking at something like this. 618. If the 618 holds, What extension does that predict? Yeah, 1382. Okay, so 1, 2, 3 is one at, oops. One, price respected the support. Two, it made a higher high relative to other support and resistance. And then the three is the retracement back into the roll reversal. Okay, and really if you want to do number four, four would be the higher high here relative to here. Okay. And remember, yesterday we predicted it drops down to here because of the pivot profit zone and the psych level. And because this was already respected once a week ago, that the potential of this 1, 2, 3, right, was there. So again, we already talked about it yesterday that it could do something like this here. And if it does that based on the double bottom on the higher time frame, it could go up significantly more than that. Okay? So the funny thing is, if you want, this up here was yesterday's 4-hour 21, which says down. And on this time frame, down to at least support, which is obviously here. And if the double bottom holds, then it's going to 1, 2, 3. Okay? And then if the 4-hour 21 does want to continue its mission to the lower side, this will probably do a 3-wave correction and then work its way down next week. Yeah, you could extrapolate it out any way you want, Freddie boy, but that could be a good idea if you're ready to sell yens. If that's what you want to do. Okay. So we could look at oil here. Oil we had going from 40 to 50 and then probably back in to the zone. Okay. Getting pretty close to 48. Nita. Now, why did we stay so long here at 47 and change? We have weekly pivot resistance, and we have monthly pivot resistance. This is MR1, monthly resistance 1. And based on the pivots, really what we're looking at is $50.13 as a high, which is another way of saying go from 40 to 50. Now we're just throwing in some silly pivots. And the whole funny thing about this, it has nothing to do with supply and demand. So if oil goes from 48, where we are now, to 50, and it takes a day or two to get there, then that's really neat. That means a day or two of Canadian dollar strength, and then further Canadian dollar weakness would be assumed. You still have to observe it. Yeah, monthly R1, weekly R2. Yep. Life is great. Life is grand. Life is good. I don't know, Polly. I don't know what the heck they use. Ba-ba-bo. Ba-ba-bo. But looking at this, guys, Canadian dollar down, oil up. Very similar, huh? Well, I guess I got to go hour for hour. Let's do this 4 hour for 4 hour. Okay. High correlation, huh? Fred said oil has a big double bottom, big W bottom on the weekly with target 75. All right. Okay. That has nothing to do with anything fundamental. So even though what's happening now isn't fundamentally based, a drive from 50 to 75, that doesn't sound right to me. Okay, so yeah. So for example, let's look at one small aspect of oil, and that's Saudi Arabia. What Saudi Arabia does may impact the value of oil. We're not including Russia, which is pumping as much oil as it possibly can, Iran, which is pumping as much oil as it can, Venezuela, which is pumping as much oil as it can. I don't know about Kazakhstan or what they're doing in Baku, but probably pumping as much oil as they possibly can, right? But so we know all that, but let's just look at Saudi Arabia. July was the biggest month of Saudi Arabian production of oil in the history of Saudi Arabian oil production. Saudi Arabia pumped as much oil as they could in July and broke their own record for the amount of oil they produced. Holy crapola. So that should keep oil prices down, one would think. Now, maybe something else in the world is happening, but those are facts. And increase in supply generally decreases price. So yeah, so Puccini says destroying competition. Well, that sounds really good. That sounds very smart and very strategic. What's really happening is Saudi Arabia is dead broke. And they're desperate for money. It's not smart, strategic, moves. They're desperate for money. Yeah, well, so if I was a hedge fund of certain, suave, I would probably be short selling the Saudi Arabian currency hardcore. Google it, Danny boy. Yeah, the real. But still, right? So that's what I see when I see numbers like that. I see oil at $40 a barrel in July, and Saudi Arabia needs the money so bad that they just pump more oil so that they can get more currency. You know, see what I mean? Instead of waiting for oil prices to go up so they can get more currency, they just go ahead and produce the oil, knowing that on the long run they're hurting themselves even more. But they have to have money. They're desperate for the money. So whether it's $40 a barrel, $30 a barrel, they'll just pump more oil. And that is what, Iran is doing. That is what Russia's doing. That is what Venezuela is doing. You need more money, just pump more oil. And, and OPEC clearly cannot manage the situation. OPEC clearly has failed. OPEC is basically dead. Otherwise, they would have just cut off oil supplies altogether. Just the threat of that will get you to $75 a barrel. Just the threat. All they have to do is say, let's just get into a little room in a fancy hotel somewhere, right? Austria, right? Let's all go to Austria, get into a 5-star hotel somewhere, meet in a secret meeting room, and we'll just all pretend to sign a deal that says we're going to slash oil production. Price will immediately go to $75 a barrel and we all win, even though it's not true. How does Saudi Arabia, well, how about look at Venezuela? Venezuela has more oil than Saudi Arabia, and it has 700% inflation. What happens is they call it Dutch disease. And what it is you become a petrol state, and the entire country becomes welfare bound. You suddenly get an entire society that doesn't know how to work at all. No skill, no work ethic, no capability, no understanding of what to work on, or no entrepreneurialism. Just millions and millions and millions of people on a oil welfare state. And I'm not, and that's an oversimplification for Saudi Arabia, because Saudi Arabia is way better off than a country like Venezuela. But it's somewhat true at the same time. Okay, not completely true, but certainly somewhat true. And they're in a very awkward situation where, they need the money. I mean, little things like, what's the average age in Saudi Arabia? What is it? 23? Right? What do they have, like 100 million people under the age of 30? I mean, it's crazy, right? It's a huge percentage of their population is under the age of 30. What's the average age for Japan? 90? Right? Well, I Googled it and I couldn't find any good information. I did find out that 65.92% of the female Saudi population is overweight. Wow, 66% of Saudi women are overweight. But that's probably stupid pig dog, Google run by, psychopaths. So anyways, there you go. Just a little thought process there. So you might find years and years and years from now, once you get a grasp of macroeconomics, you start to pay attention to then things like microeconomics. And that would, an example of that might be demographics. Like we're talking about, what is the average age of somebody in Saudi Arabia versus what is the average age of Japan? Japan is very, very, very old, and the percentage of their population below the age of 30 is very, very, very small, which means a lot of their workforce, well, that's why they have almost no unemployment. More than 97% of people able to work are working, right? So they have no unemployment, which is amazing, right? But everyone is old, which means they're expensive. And also healthcare is an issue, right? And that the young people are working to pay for the old people. And on top of that, Japan, as a percentage of GDP, is outrageously burdened with debt. Miriam says, do they import labor? And the answer generally is no, and that is another problem. So their workforce is working at maximum capacity to pay for stuff they did 20 years ago and to make sure their old people have some sort of, I don't know, so old people can be retired. Right? So Cash says, yeah, import the labor, but they generally don't. Cash. That's funny. What part of the world are you in, Cash? Australia. Cool. So we're sidetracked here. Funny thing is, when you have 18 monitors, I forget sometimes that we're looking at this one. Let's analyze the Swissy. Do you guys mind? Life is great. Life is grand. In fact, let's go Pissy. Where's Pissy? All right. This is pound Swissy. Okay. Interesting stuff, right? The Swiss franc. Think of wealthy people in Europe and in the Middle East. When they get scared, they cash out of their investments, and where do they park their money? But where, like what physically? Switzerland, yeah, but a Swiss bank account. Or gold sitting in a Swiss bank account. No, I'm specifically talking Swiss bank accounts. Can you think of like a wealthy sheikh, maybe out of Saudi Arabia, and he's like, man, our real is getting crushed. I got to get this out of Saudi Arabia. So that, right? And remember, they're getting paid in US dollars for their oil. So instead of moving it to Saudi Arabia, where do they move it? Yeah, their Swiss bank account. So actually envision this. Can you envision a private jet plane landing in an airport in Switzerland, and the door opens, and a guy walks out, a big burly guy in a black suit walks out, and he's carrying two giant suitcases, and he walks down the door, and then another giant guy in a black suit walks out of the jet plane with two giant suitcases, and he walks down, and a third guy gets out of the airplane, black suit, two giant suitcases, and he walks out. And then finally a sheikh in his beautiful white robes comes out, puts on his $5,000 designer sunglasses, puts it on, and they all walk to the row of limousines and SUVs. Right? Now it'd be Zurich, I think, Puccini. It'd be Zurich. Geneva's, that's for the diplomatic nonsense. So anyways, and off they go to the bank. And he's got something valuable in those suitcases, right? That's where Switzerland's the kind of place where you roll into the bank and you're like, I have $40 million in cash I'd like to deposit. Yeah? And they'll take care of that for you. Okay? But that's when things are going bad, right? Yeah, danke. Remember, it's Swiss German, not German. But so anyways, that's what I envision, even though it's a cliche. I mean, just have fun with it, right? But that's when things are going bad, not when things are good. What happens when things are going good? And the sheikh wants to buy a hotel in Zambia. Right? He wants to buy the Hotel Rwanda. Flies to Switzerland, drives to the bank in his limousine and series of SUVs. They show up with empty suitcases. And what do they want? They say, fill the suitcases. We're going to Rwanda, right? And off they go. And so that's when things seem to be good and worthy of risk taking, right? So when the world is offering you opportunities, you need the money. When those opportunities are failing, you take your money back, right? That's the risk on, risk off. I had a couple of questions today. What's risk on, risk off? Well, that's risk on and risk off. When opportunities are worth taking because you feel good and optimistic about the future. The only reason you'd buy Hotel Rwanda is you think, well, maybe the economy there locally is going to improve. You could probably buy the hotel cheap and, and various other reasons. And you're like, I want to put my money there. Now, in fact, I remember about 5 years ago, I was listening to like a 3-hour interview with one of the biggest investors in Saudi Arabia. Someone that's got billions and billions and billions and billions, right? And they said, so, what are you investing into these days? And he said, Africa. He says, there's no way that I can invest my money in the United States or in the United Kingdom or Germany and expect 1,000% return. It's amazing, right? That's what he said. So I go to Africa, I go to a place like, I don't know, Rwanda, and he says, so I buy the electrical company, the water company, so on and so forth, right? And he builds cell phone towers everywhere. And he expects at least 1,000% return. So you take those things when opportunities feel good, right? And when you believe you're going to get a return. If you're worried about the world collapsing, or if you put that money in, you might not get it back. Now that's risky, right? So that's the risk on, risk off idea. So one thing, pound Swissy, for example, falling, is that an example of risk on or risk off? Okay, this is money flowing to Switzerland. So you're thinking about the sheikh getting off his private jet plane with bags full of money that he's taken from other investments all around the world, and he's going to park it in the Swiss bank account where it's safe. That's a risk-off scenario. Okay. There's other ways to observe this. Do 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 do. A lot of these are not quite set right. Okay. S&P 500 over the last day or couple of days. Looks like that. The FTSE looks like that. Very similar. DAX is very similar too, right? Euro 50. This doesn't look great. Guess we've lost Nikkei already. Okay. Oh, that was Dow. And then here's the S&P 500. All right. So S&P 500 generally down. Dow, right? The Dow generally down. FTSE generally down. DAX generally down. Euro 50 generally down. All right. So when you're feeling good about the global economy and investing in the global economy to make almost certain profit, would the stock market fall? So you can see the jet planes landing in Zurich right now with suitcases full of money, right? They cashed out of these. The Dow Jones Industrial Average, the S&P 500, the FTSE 100, the DAX 30, the Euro 50. They're cashing out of all these investments. So now they have suitcases full of money, and they park it at the Swiss bank account. That's risk off. Okay? And generally when that happens, the yens also get strong. But right now we know that the Swissy is working pretty well for that, right? So you can go back to this idea. If you see the stock market's falling, you might want to buy some Swiss francs. So let's go back. Let's make these hourly because that's how we looked at the stock market. I think, right? And then this one. Okay. So during that same period that the Dow, the S&P 500, the FTSE, the DAX, and the Euro 50 came down, look at what happened here. Aussie Swiss franc came down, Kiwi Swiss franc came down, CAD Swiss franc came down, and pound Swiss franc came down. Is there a relationship? Yeah. Cool, right? So somebody asked me the other day, do I trade stock futures or commodity futures? The answer is, well, you could trade the same thing right here, right? You could say the FTSE. Let's change this up. Okay, let's change this up. Let's get jiggy with it. Yeah, we might have lost these data feeds. I got to be careful. So let's zoom in. Yeah, it's moving. All right. Not perfectly related, right? But you could watch the one on the left and trade the one on the right. Again, not perfectly matched, but reasonably matched. Okay. Ba-ba-ba. Now, I guess I should go back to the S&P 500 because I wanted to show you something. S&P 500, great. Watch this. It's hard to see with this chart, but bounced off the 21, bounced off the 21, and yesterday we hit the 21 and bounced. And immediately. This was the daily 21 EMA. What do you think, guys? Was that a coincidence? Yeah, John, yeah, there's a well-established trend. So I'm not crazy concerned about that. Uh-oh, it's magic when I'm with you. So if that continues, okay, we're going to need a follow-through today or tomorrow. We don't know. It's not the most beautiful pattern I've seen on the daily chart. But is it possible, or is it relatively possible, that somewhere in this zone here, price moves back up? And does this head up? Is that reasonable on this chart, guys? Okay. That could be part of your plan, right? So that's just the hourly chart. How does the 4-hour chart look? If it did this and then did this, this would just do this. 265 as expected on the initial claims. No, I don't subscribe to that one way or the other, Cash. Why are people in the stock market? Philly Fed 2.0 as expected. Great. They want to make money. Do they want to make money if Clinton is elected? Do they want to make money if Trump is elected? Okay. So, I don't know. Be careful of what you read in the newspapers. Just be careful. People are in there to make money. It was like, for example, when China and Japan were fighting over the islands, there was lots of talk about catastrophic, situations that could arise out of this. And somebody asked me back then, too, should they get out of the stock market? Now, what was this, 2 or 3 years ago? Would that be now with, with hindsight, would it have been a good idea to get out of the stock market because China and Japan were fighting over some islands? And that there could be war? It could be war. That's what we read about over and over and over again, right? Remember how crazy that was? It was like crazy. People were like freaking out. Yeah, doomsday scenario, right? You know what I said? Stay in the stock market unless missiles fly. If missiles fly, cash out. But don't get out because of rhetoric. Don't get out because the Wall Street Journal told you to. Yeah, we're all going to die. So. I mean, like, come on. Right? Come on. People are in the market. So another way of looking at it is an insurance company or an endowment has made investments that should last 20 or 30 years. That's how they invest. Okay? Are they going to get out because of news like that? Because China and Japan are fighting over some islands? Are they going to get out of that 30-year investment? It took them years, right? The stock market crashed. And finally, they had to tiptoe back in and start buying things at the right valuations, and that was risky. And they've built up their positions to last 30 years. Right? So they're not going to get out unless there is a war, and then, okay, then great. Now you got to adjust. But, you got, we need to, pay attention to what real money is doing. Okay. So how does that smell? I mean, this goes back now, beginning of July, this is what we were expecting. So if this goes up off the daily 21, that would be cool. Okay. And if it doesn't, then that's also important information, correct? All right. We should probably talk about the no-fly zone. Do you know about the European no-fly zone? Cash, I just got out of about 27 trades yesterday. So I don't have much going on right now at all. Russ says, yeah, why are people buying? Because there's nothing else to do with their money. Okay, the no-fly zone. What happened when we got here in January? What happened when we got here in March? What happened when we got in this zone in April? What happened when we got here in late May? What happened when we got here in early June? What do you think is going to happen now? See, the closer you get to 115, the more likely you're going to force the ECB to sell euro. Is euro trying to create inflation or deflation? Is a stronger euro creating inflation or deflation? Yeah. So you're kind of making Draghi look bad. At some point, the dealing desk at the ECB has Draghi walk in and says, "What? 114?" And he says, "All right, boys, we don't see 115. Do you understand me?" And that's that. That's the European no-fly zone. This 114 area, 115 in particular, unacceptable. Okay. And poor Draghi, it has nothing to do with Draghi. It has nothing to do with euro. It's just people getting out of the dollar trade. Right? Remember, I've explained it a million times over. If you think the Fed's going to raise interest rates in September, you buy the dollar. The closer and closer we're getting to September, the less it feels like the Fed's going to raise interest rates in September. So now people are getting out of the dollar long. They're not necessarily selling dollar, and they're not necessarily buying euro. They're just getting out of their euro dollar short. Okay, so now it rises up here. And ECB is going to have Draghi walk into the office and tell him to fix that situation. Okay. Now, should we pay attention to I don't know, the monthly reversal pivot profit zones? See, on August 1st, 18 days ago, we said the high side, the projected top of the month is right here. 113.53. Technically 54, but okay. Cool, huh? So there could be a trade plan based on my no-fly zone theory that if you witness the European Central Bank dealing desk dumping euros on Draghi's orders, then it might be a sell and hold scenario, right? Morgan Stanley, huh? Where are you getting this Morgan Stanley stuff? Let's see if I can. How do I break this down? Oh, yeah, Euro pound. Okay, so you're telling me what? Okay, let me read it again. Russ says, so Wayne, when Morgan Stanley tells us that Euro pound is likely to go to 94 or parity. All right. So you're saying up. Morgan Stanley is long at 83.37 with a target of 90. Did you know that? Well, I'm getting pretty specific on you now. So yeah, Morgan Stanley bought the euro pound at 83.37. They're currently up 266 pips, and they have a target of 0.9. They added to this position actually on July 4th with the New York close. This is what Morgan Stanley says in their notes. The Bank of England have made it clear that they will ease further this summer. Of course, this is what back in July. Most likely at the August meeting when they have run through new forecasts on the economy. More important for the British pound is the environment that economic data will come in weaker as business activity slows down. Now, we know that that's wrong. It's coming in stronger. Sure, the political risks have reduced as Prime Minister and the Cabinet have been appointed. The Great British Pound reaction going forward will be in response to monetary policy expectations as a result of weakness in data. We also see further upside for the euro, supported by the increasing real yields. The market will pay particular attention to survey data between now and August 4th. So we're well past that. Well, the outcome is negative for the euro area. Well, so the negative euro area growth, we see no immediate channel that is likely to drive euro weaker. Because remember, this is way when euro dollar is down, right? The euro area runs a current account surplus, which would need to be recycled elsewhere to drive euro weakness. A tall order in an environment of declining risk appetite and returns. So anyways. So right now, euro pound is at 86, and Morgan Stanley is up 266 pips with a target of 400 pips more. But that's all I know about Morgan Stanley, but thank you for asking. Oh snap, that just happened. So are you documenting your trades like that, guys? You are? James, I can't tell you that. Yes, in my mind. You need to start documenting your trades like that if you want to be a professional, because as you just saw, professionals do that. Now, you might find it interesting at 87, Credit Suisse is going to short. Huh. What? Yeah. So we're like less than 100 pips away, and Morgan Stanley's long, and they're going for 90, but at 87, Credit Suisse is going to short against them. Ho, 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 ho. Really? Yeah. Yeah, absolutely they do, Fred. Most of them are actually horrible. So anyways, here we are getting closer and closer to a no-fly zone, and we've reached the monthly target. You may consider this over the next period of time. Okay, that might be high enough. So, Gorilla, you need to post them on Forex.Today. You see what a great job Ryan's doing these days? Let me. So let's go to Ryan's history here. So Ryan is posting his trades. Thank you, Ryan. We just did pound Swissy. So let's take a look at his pound Swissy from today. Look at the notes that he's placing here, guys. Okay. So that's an example of how to be using Forex.Today correctly. So he could go back in all his trades. Look, August 18th, August 18th, August 18th, August 18th. August 18th, August 18th, August 18th. You can go back day by day. August 17th, August 17th, August 17th, August 17th. That's how you do it, guys. Now he's got his own trade journal. By the way, if you want to follow him, all you have to do is click follow. When he posts, you will get updated. Do you guys want a link? There you go. Cool. All right, so tomorrow I'm going to be at fxstreet.com. Hope to see you there if you are a premium member. Gorilla, are you going to post? I'd like to see that, Gorilla. Yeah. And for those that are having trouble, a couple of people, or about 3 or 4 people, reported having trouble uploading charts. But like Ryan clearly has no problem. And the programmer doesn't seem to have a problem uploading charts. So we're trying to figure out. So maybe, I don't know, try again. Make sure you're logged in, for example. Maybe try a different browser. You know, I'm finding Firefox works really great on. I'm having problems on various other websites, and it has to do with browsers. And it seems like Firefox is the best now. Okay. Okay. So, anyways, peace on earth. May the pips be with you. May your profits be above average, and I'll see you tomorrow.